Now talk about all of the cues that are important from an India market standpoint as well as the stocks. We have Ekta, Mangalam and Hormaz all here to fill you in with the trade setup. Guys, a very good morning to all of you. Ekta, let me come to you first. Of course, it'll be important to see if the pullback is done for now or not. But take us through what we should watch.
Thanks for that. Well, yes, yesterday the markets did extend their losses. It fell for the third straight session. FIIs net sold another whopping figure in yesterday's trading session, and the DIIs net bought quite strongly, close to around 6,000 odd crores. Now, yesterday the sluggish global markets plus mixed earnings really weighed in terms of sentiment, because we had numbers from HDFC Bank, India Mart, LTI Mindtree, ICICI Pru, which probably weighed down in terms of overall sentiment. Now, this morning things are looking better. Besides that, earnings, we have IndusInd Bank, which will be reacting to its Q3 numbers, and its net interest margins have come in flat for 3 quarters. Slippages were higher, but there wasn't real significant net interest margin pressure which came through for IndusInd, and I assume that would probably assuage a little bit of concerns for the market. Separately, we have the US markets, which rose, led by a tech-led rally. Asia, which is largely higher at this point in time. Brent crude, there are no surprises. It's hovering at around $78, $79 per barrel. And the gift Nifty is suggesting that yes, we could start in the green. Whether or not we sustain it, what the FII picture looks like will be something that the street will watch out for. Earnings today, we have Reliance Industries, HUL, Ultratech Cement, as well as the likes of Paytm. Tomorrow is a trading session, so we do have ICICI Bank, Kotak, IDFC, First Bank. We will have Reliance reacting to its numbers, but besides that, we have a lot of focus in terms of financials, pre-numbers, post-IndusInd Bank, as well as in terms of a reaction, in terms of Monday's trade.
Okay, got that. Ekta, thanks a lot for taking us through all of those cues. Clearly a lot of numbers that we should watch today as well as tomorrow. But Hormaz, also a lot of numbers that came through post-market close yesterday.
Indeed, and as Ekta was highlighting, IndusInd Bank will react to its results. Most of the numbers were in line. The NIMs were a positive surprise. Slippages were a bit high on a sequential basis. So that was something that we'll have to watch out for. But also reacting to the results from the broader market space, something like Finolex Industries, Shoppers Stop, Metro Brands, Supreme Petrochem will also be reacting to numbers. And speaking of Supreme Petrochem, they've purchased some 96 acres of land in Haryana to set up a new unit, and they'll be spending around 800 crore rupees to set up that unit, and they'll be funding that through internal accruals. Dixon Technologies informed the exchanges yesterday that one of their units in Noida got searched by the Directorate General of Revenue Intelligence. This was regarding a raw material imported for one of the products that they manufacture, but the issues that they have raised are interpretational in nature, is what Dixon has said, and that they have cooperated with the authorities and there is going to be no material impact on the same. EMS has emerged the L1 bidder for an Uttarakhand project in Uttarakhand, which is worth around 480 crore rupees. That's for a water supply and sewerage treatment project. Bajaj Finance's board will meet on the 29th to consider a fundraising proposal. This is through debt instruments. And lastly, HCC, where its subsidiary in Switzerland has divested its entire equity interest in another unit to a French company for around 928 crore rupees. So we'll keep an eye out on all of that, but it's Reliance is going to be the one to watch out for. Back to you.
Okay, Hormaz, thanks a lot. We are going to watch for all of these stocks in today's trading session. Finally, it's over to Mangalam, who's looking at all of the cues from the futures and options space. Mangalam, yesterday was another weak session, but off the lows.
Another day, another decline of the week lows, what we saw. But we know two things that stand out. One is the FII selling in cash market. For the second day running, we saw nearly 10,000 crores being pulled out. So 2 days, 20,000 crores pulled out in the cash market. And why was that? It was because of HDFC Bank. Just take a look at the way the Nifty moved yesterday along with the HDFC Bank stock. You would see that the Nifty did recover from the lows, but HDFC Bank towards the end of trade actually saw accelerated selling. And that amounted to delivery selling of nearly $1 billion as well. So yesterday's trading session, we saw another day 8,360 crores of delivery selling in HDFC Bank. Not only are the FIIs selling in cash, they're also selling in index futures. 2,500 crore worth sale is what we saw yesterday, where the FIIs added 18,000 shorts and unwound 7,400 long contracts. And this is stark. Why do I say that? Because, from the start of the series, the FIIs were 70% long. Now they've moved to net short position. So FIIs were 70% long at the start of the series with 81,000 long contracts. Now that's turned to 49% long exposure with just negative 5,000 long contracts or net short contracts itself. In the last 2 trading sessions itself, 85,000 net short contracts have been built. For the near term, however, we're looking at Nifty's yesterday's range as markers to watch out for in trade. Now that the gift Nifty is indicating a mild positive start, important to trade above yesterday's high. For the Nifty Bank, the 100-day moving average will be a crucial support. And on the way up, for any change in trend for the market, we'll have to watch out for whether the Nifty does go ahead and cross the 20-day moving average of 21,644.
All right, let's see if that happens. Mangalam, thanks a lot for taking us through all of those cues.